Hello traders, welcome back to my channel. I hope you are catching some good opportunities from the market. Today I'm going to share another exciting strategy which you will love to use in your trading as we move on this series. And this strategy is going to be straightforward. It will be very simple, and is one of the indicators which we have already shared on a different strategy in this channel. I will advise, if you have not watched that video, try to watch the video. Is on this channel. Today we'll be looking at two indicators basically, and these two indicators are here on the chart. Just you will see the link on the description, and the link is also, you can also get this indicator from our website. So they are available. All you need is just copy the link and paste it on your browser. Then you can easily add it to your chart. Basically, so what you need is simply go to open your TradingView. If you don't have a TradingView account, just open a free account on TradingView. With your free account, you should be able to add two indicators, and all you need for this strategy, there are just only two indicators. So one of the indicators is our pro trading pivot point super trend. So this indicator basically is a combination of pivot points and super trend combined together in order to form this indicator. So what you do is, when you add this to your charts, set your values for the pivot point period to be 1, and your ATR factor should be 2, and the ATR period should be 7. So this is the changes which you need to make once you add this indicator to your charts. Okay, the next indicator which we'll be using for this strategy is our pro trading MACD plus SMA 200. Okay, this, all you need is change the settings. Your source should be closed because you have different sources, so ensure that your source is closed. So the calculation of the indicator will be going directly with the close price. For every candle that closes on the chart, it will calculate the range, then it should be able to give you the accurate value. Then the next one is change the MACD value to 45. Then the next one is 90. Then the rest of the settings should be as it is. Once you have done this, then we'll move into how you are going to utilize this strategy. This strategy, we are using it on 1-minute charts, 5-minute charts, and 15-minute charts. So within these 3 time frames, you'll be able to use this strategy in order to make good opportunity, capture some good pips from the market. From here, first thing we do is, if you are familiar with this channel, you know that we always identify the direction of the market. At every particular point in time, we always identify the first thing is our directional bias. So for this, we are using our pro trading MACD combining with the 200-day SMA. So once price is trading below the indicator, as you can see, you will be able to understand that we are currently in a downtrend. So, and when we are in a downtrend, from this point, we have a clear confirmation that we are in a downtrend. And for the point once we are in downtrend, we only consider selling opportunity in the market. We don't do anything about buying the market. So the next thing is the pro trading pivot point super trend. So you see here, you have this these are super trend, but of a different settings based on what I've explained to you. So you will get a buy signal on the charts and you get a sell signal on the charts. So once you identify the direction of the market, currently we have identified that we are in a downtrend. So we can only take the signal for sell trade. And we will take the signal for the sell trade when price is as close outside this cloud. So because this cloud is our muddy water, so we don't want to take a trade when price is inside this cloud, because it means there is a consolidation at that point. It can happen that price might break above, and which will make us to lose the trade. So the best opportunity for us to enter the market is when the price has closed outside the cloud. So once we have here, at this point, you see we have a sell signal, considering the fact that we are currently in a downtrend, and here price has closed outside the cloud. All we need is to, at the wick of the price, we place our horizontal line. Behind the horizontal line, below it, we place our pending order for sell. So once this candle here breaks this horizontal line, it will trigger our sell trade. Our stop loss will be slightly above this 200-day moving average. And for this strategy, our take profit is 1:2. So if we are risking 10 pips at this point, our target should be 20 pips. So what you use to determine your target is the distance between your entry point and the top of this moving average. So once you calculate this, you should be able to know, duplicate it in order to get 2 times of your risk for you to place your take profit. If you see from here, we're able to make, if you consider this our take profits for this trade, we're able to make win on this trade. Here again, you have here another signal for sell trade, and here the price has broken below the cloud. Price has closed below the cloud. So what we do, we place our horizontal line and wait for the price to break the horizontal line, and below it here we are placing our pending sell order. So on this candle, where our pending sell order must have been triggered. So once it's triggered, then we place our stop loss here above this 200-day moving average and calculate our risk. So if our risk here is 20 pips, our take profit at this point should be 40 pips. Okay. The strategy is very simple and very straightforward. You see at this point, again, you have another signal at this point telling you that price is going to go down, and you see here price has already closed outside the cloud. So you place your horizontal line at the wick of this price once, and below this point you place your pending sell order. At the close of this candle, your pending order will be triggered. Your stop loss is slightly above this 200-day moving average. From this point to your entry is your risk. Okay, so if your risk at this point is 30 pips, then here your take profit will be 60 pips. So one thing again you need to understand is that if your take profit is not reached before you get an opposite signal, the moment you have this signal here, you need to exit the market, because you need to understand the direction of the market. Price can do anything in the market, so once you get an opposite signal, if your take profit is yet to be hit, exit the trade and reassess the signal. If you see at this point here, there is another signal which happens at this point. Here you get a sell signal, but price is inside a cloud. You need to wait, exercise patience until you get to this point when price has closed below the cloud. So once you get the price below the cloud, so what do? You get your horizontal line and mark at the edge of the price that closed below the cloud. So place your pending order below that horizontal line. The moment price breaks below it, your pending order will be triggered, and once it's triggered, you place your stop slightly above this 200-day moving average, and your take profit will be 1:2. So if you are risking here 10 pips, then here you should be targeting to make 20 pips from the trade. Here, let's take a look at a buy opportunity using this strategy. At this point, we get that the cloud has moved from down. At this point, the cloud was down, which is a downtrend, and now it has changed to up. So here we are currently now from this very particular point, we have moved from down to uptrend. So once you have entered the uptrend, from here you don't just enter the market, because you need to get a fresh signal which will happen after the confirmation has been made. So here you get a sell which is opposite the signal. You don't take this. This is not a signal to take. Here you get a good signal which is a buy trade, and price has closed above the cloud. So what you do, once this price closes, you mark your horizontal line and place your pending order slightly above this horizontal line, just behind the horizontal line. So once this candle breaks the horizontal line, it will trigger your trade. Your stop should be below this 200-day moving average, and your take profit, if here is 10 pips, your take profit here should be 20 pips. Here again, you see at this point you get a signal which meets the criteria. The price closed above the cloud. So once this closes, you mark your horizontal line, you place your pending buy order, and you see on this trade we make a loss. So that is how the market plays out. It's not all the signals that will give you a winning trade. Some signals will give you a losing trade, but considering that we are taking at every particular point in time when we win the trade, we are making ×2 of what we are risking. So this is what will give you edge to be able to make more profit. So when you lose the trade, it's going to be very minor loss from your capital. So with this, making ×2 of what you are risking, you should be able to grow your account very fast, and that will make the trade worthwhile. I hope this strategy is very easy for anyone to understand. leave a comment in the comment box below if you have any question or if you have any suggestion, or if you are not clear with any part of the description, just let us know, and we'll be able to explain to you more on this. I wish you happy trading.